So I would start sharing my screen. It's good to see everybody here. This is so exciting. Let me share. Okay, let me know if you can see my screen. Can everybody see my screen?
It's
Yes.
loading. Yes, I'm seeing it.
Awesome.
Yes.
Awesome. Okay. So today we're going to be talking about tax season success. I didn't pick the topic. Dr. Brown picked the topic. So I'm going to try to stick with his plan, but my goal is really to give you guys more than enough meat by the end of today. Okay. And as business owners, even if we cannot get all we need for tax season, I'm hoping that I'll leave you with enough to impact your business going forward. I always tell people we file taxes using historical data. My hope is to give you information that even if you cannot apply at this point in time, you can still use it as the years come by. All right. So just a quick disclaimer, because I have to do that. All information and materials are for educational purposes only. All parties are strongly encouraged to consult with their CPAs, accountants, attorneys, and financial professionals before entering any type of investment or any conversation or using this information, okay? And I can be your CPA too. But this presentation does not constitute a CPA-client relationship or financial investment advice, okay? And I apologize, I did not take off investment because I just talked to a group of real estate investors, and so I forgot to take off the investment part, but it's still the same thing. All of this information, we do want you to talk to someone who understands your full situation, because I don't know everything going on with you, and I can provide a strategy that may be great for one person, but not for you. And so it's always important to have that person who can tailor your strategies to your specific situations. But the good thing is I'm going to give you enough to go challenge the person. I'm like, yo, I just found out this stuff. How can we put it to use? Okay. So let's keep it going. My objective today, like I was saying at the start, is to get you prepared for 2024 tax season. And if I fail to do so, I am sure I'll be able to prepare you for future tax seasons. But above all, I hope that I give you the tools to succeed as a business owner. I strongly believe that the tax code was set up for business owners and real estate investors. And if you have the right information, there's just so much you can do as far as leveraging the tax code for you. And I'm hoping that by the end of today, I would have shared some stuff with you that will make a difference. A little bit about me. I know Dr. Brown already said some stuff, but let me do a little bit of introduction here. You've already heard my name. I'm Dr. Lilly Mbinglo, and I am a licensed CPA. It's so important for you to know that all of us CPAs are not licensed. There are CPAs that have the pass the exam, but they don't keep up with the changes in what's going on in the marketplace. They are not taking CPEs, and so they are not active licensed CPAs. As a business owner, you want to run away from someone who is not licensed and whose license is not active, because there'll be times when you need them to sign a letter for you, and they cannot do it because their license is not active, okay? I am the founder of the accounting firm, the ARC NPS. We're a full-service accounting firm. I do teach accounting at Regent University to the MBA students. I am also an instructor for V-Week at Hampton University, where I teach financial forecasting and accounting for business owners. I am a wife and a mother. I am a teacher. I do have a TEDx talk. Check me out. I talked about gratitude. It's so much fun. You're gonna see me dancing on stage. I dance on TEDx stage, okay? That's the best part of it. Even if you don't care for the talk, I do train and coach. I train business owners and nonprofit board members. I coach future CPAs because there's a shortage of minority CPAs, and so I try to coach some, and I am an author as well. I love to help people save on taxes and build legacies. I strongly believe that's the new movement, is all about economic empowerment. It's one thing to have a voice, but if it cannot be backed up, there's only so much change you can bring. I'm very passionate about nonprofits. When I went into business, my goal was to be the CPA for nonprofits, except the business world needed me too. And then I had to kind of expand. A couple of fun facts about me. I love to dance. I love to travel. Vegas is one of my favorite places. I have driven to 48 US states and spent a night there. I have no bad days. And the craziest thing I've ever done is skydiving. So I would love to know who is here. If you don't mind, I mean, I've already seen your names, but I would love you to say where you're joining from. You can type it in the chat. And I always want to know one business or tax lesson that you learned the hard way. Like one of those things that as a business owner, you had to learn the hard way. Please feel free to type it in the chat. I know I only have 30 minutes to talk, so I would have loved to go around the class, around the group. Sorry, I said class because I was just teaching on Monday. But if you can put it in the chat, that would be awesome. Thank you, guys. So what's our agenda for today? It's pretty straightforward. We're going to talk a little bit about how businesses get taxed. We will talk about different business entities because that plays a big role in how you get taxed. I will share my top 10 tax strategies because I hope that it would impact how you run your business going forward if you can leverage it for last year. We'll talk a little bit about what's new for the tax season and also finalize with some compliance essentials for both business owners and individuals, because even though you're a business owner, most of you are still going to file your personal taxes. Does that sound like a plan? Keep going. Awesome. All right.
Yes, ma'am.
Is that a hand up or is feedback good?
I just wanted, sorry to interrupt, Dr. Lilly. I just wanted to share from the chat, Dr. Wilson, Dr. Robert Wilson from North Carolina,
Awesome.
Dr. Sandra Jackson from Royce City in Texas, Broken Arrow, Oklahoma, originally from Chicago. That is Dr. Chauncey, and Dr. Keisha Burden from Pennsylvania, and I know Dr. Oten. He's in California. Yes.
Awesome. Awesome. I've definitely driven to all those states, but I used to live in Chicago.
Wow.
Dr. Shanse, I used to live in Chicago. My undergrad was, I went to Truman College. I went to Northeastern Illinois University before I moved. How neat. Yeah. Chicago in the building. All right. I need to point out something. Okay. I get really excited about this conversation. Please, if I start to speak too fast, slow me down. It's just the passion. Okay, I love this so much, but it would not be fair if I get too excited and then I don't leave you guys, with something that you can take home. So if I get too excited or I start to speak too fast, please let me know and I will slow down. Okay, so that's our agenda and we're going to get started. Who loves being a business owner? Because I do. Yo, everybody? Right? Yes. There you go. Oh, okay. Oh, that is awesome. Oh my God. You guys own a life coaching company and a pastor at church. That's amazing. See, I'm here for any questions you have nonprofit wise. So yes. So let's talk a little bit about business ownership, because I have been a business owner, and most of us here, if we own businesses, is because we have the heart for it, right? And we love what we do. Couple of benefits of being a business owner: you're your own boss. You get to make your own schedule. There's no limit to how much money you can make. At a job, you're limited by whatever your offer letter, your W-2, and every now and then increases for performance or inflation. But as a business owner, there's no limit to how much you can make, right? You can also have a life while you work as a business owner, and you can involve family. So many great benefits to being a business owner. But with that comes a lot of responsibilities. First thing, you have to be disciplined. Oh, I'm so sorry. Okay. You have to understand how business and taxes work, and which is a big deal. Okay. You have to keep track of records, something that an employee doesn't need to worry about. You have to wear multiple hats because you become your own, marketing committee, your own salesperson, your own accountant. I mean, until you're able to hire other people, right? And of course, for those who are introverts, you have to deal with people, and you have to pay taxes when you start making good money. And also you have to start thinking of ways to protect yourself, right? These are different responsibilities that fall on the shoulders of a business person. And so for today, it's important that we break down how businesses get taxed, because it's one of the most important things for you to know, since taxes is one of the things you can't run away from. Every year, you have to file taxes. You register your business once, but you have to file taxes every year. So if you do not understand this part of your business that is so crucial, then you're always going to be in trouble, right? So how do business owners get taxed? I love it. Business owners, when they earn money, what do? They deduct all the expenses that they had to incur to make that money, right? And they only pay taxes on what is left. That's incredible, because when you're an employee, employees, when they make money, what gets taken out first? Taxes. And then they spend whatever is left. Okay, so as a business owner, what does that mean for you? It means you have the power, right, to almost, I don't want to say to decide your taxes, but for a greater part of it, if you are very good with planning and leveraging the tax code for your benefit, doing it the right way, you can literally reduce your tax liability to nothing or just your fair share. Okay, versus an employee that once you make money, taxes gets taken out, and the more money you make, the more taxes you have to pay. But with a business person, the more money you make, the more tax strategies are available for you. And if you have the right person and you can leverage that, then you can manage your taxes even better. Okay. So for the average business person who doesn't have an entity set up like a sole proprietor or a single member LLC, the average person who doesn't, or let's say an independent contractor, you would have to pay 15.3% of self-employment taxes. That's usually the average business person. However, for business owners that have set up themselves that have structured themselves in different business entities, they are able to determine their tax rates are kind of different because they get taxed differently based on how they are set up. Let's talk a little bit about the differences in the business entity structures that are available. So when it comes to business entities, and they're also called legal entities, three main things stand out: how you get taxed, the owner liability, as well as the ability for you to raise funds. So anytime you're thinking about how your business should consider being structured, you always have to think about how you're going to get taxed, your owner liability, and your ability to raise funds, because these things are crucial for the growth and success of your business. And so let's talk about the different entities so you understand how they get taxed and you can choose the right one for your business. Well, the first one, for those that have no entity, they are set up as sole proprietors. You wake up, you want to do business, you operate as yourself, right? This is a one-man show. Only problem is if something went wrong in the business, you have no protection. They're coming for you. They're coming for everything you own. Those sole proprietors file their taxes on the Schedule C with their personal taxes. And so they pay that 15.3% self-employment tax rate I just told you about. What is that? What does that entail? That's Social Security and Medicare full that they have to pay. When you work for an employer, they pay half of that. They pay 7.6% of that money for you. But when you work for yourself, because you're self-employed, you pay the full 15.3%. Okay. Now, if I decided that I didn't want to be a sole proprietor all by myself, I went and met Dr. Brown and I said, Dr. Brown, let's go into business. We shook hands. We didn't register anything. We would operate as a partnership. Oh my God, sorry, I didn't get my pen so you can follow me. Okay. We would operate as a partnership. However, if we don't register, we kind of have the same risk of unlimited liability. Okay. But when it comes to how we get taxed, we will file our taxes in something called the 1065 as a partnership return. We don't get filed tax as an entity. It flows to our personal taxes, and we will still pay the self-employment taxes. That's very important that I point it out, because there are some people that go into partnerships, but depending on the role that you're playing in the partnership, your tax would vary. So if we went in and we did no protection and we were just both like sole proprietors that came together for a business, we would pay the self-employment taxes. But if I went into business with Dr. Brown and Dr. Brown said, I'm going to be a limited partner, I'm not involved in the running of the business, I'm just going to invest. Guess what? He doesn't pay self-employment taxes, because he's not involved in the decision-making, in the active running of the business. So that's very important, okay? Now, we also have now LLCs. The average person who goes into business, what do they set up first? They set up an LLC. When you're a single member LLC, you get to pay the self-employment taxes and you file on the Schedule C, okay? 15.3%. But what's the beauty of the LLC? The LLC gives you flexibility. The LLC can become an S Corp if you're making a certain amount of money. You can elect for it to be treated as a C Corp for tax purposes. Flexibility. And when you make those changes, do you know what happens? It impacts how you file taxes, okay? The reason I'm going through this, guys, is because I want you to understand that as a business owner, you have options. So while you're getting ready for 2024 taxes, start thinking, am I in an entity structure that can help me save taxes, or am I giving all of that away to Uncle Sam. Okay. Then we have our different corporations. The corporation is currently taxed as 21%. And it's proposed that it might go down with Trump coming into power now to 20%. We don't know that yet. The S Corp does not pay taxes at the company level. It flows to your personal taxes. Okay. So this is one of the best ones when it comes to tax structuring for a business owner. And then this is the same as a C corporation. And then you have our non-profits. I'm going quickly because I only have 30 minutes. But why is this important for you? And I want you to take a screenshot. It's because when you start thinking about what entity structure you should function in as a business owner, your taxes, the protection you have, and how many people can be a part of it as well is crucial, because that determines how easily you can raise funds. Okay, so let's move on. And if you have any questions, feel free to ask me by the time we're done. So what are those top 10 tax tips I promised that I was going to share, right? Because I want to talk about that. I know that even if you cannot apply it now, it's going to come in handy for you, okay? First strategy that I have, oh, I forgot I have to do this now, is please get your books in order. You see bookkeeping, guys, that's your number one. Look, bookkeeping is more important than any tax strategy anyone will ever give you. And why is that? If we do not know what your numbers are, we will never know what strategies are relevant to you. Okay, so never take that for granted. If anybody comes and starts telling you tax strategies, tell them to get out of your face. Because if your books are not in order, I don't care what it is that you have, the strategy is, you would never know if it's right for you. And if you apply a strategy that is not applicable to you, you're inviting an audit. Okay, so first thing, please prioritize your bookkeeping. Never take that for granted. As a matter of fact, we have 3 years where we can go back and amend your taxes, which means even if you missed out on a strategy, 3 years down the road, you met with me and I go, wait, they missed out on this. We have to include your depreciation. We have 3 years, but we can only know that if your books are in order. But if your books are not in order, we're very limited with what we can do. And that's why I said accurate financials equal effective tax strategies. Okay. My next tip for you, please review your entity structure. The reason is because many people are usually set up as an LLC. They start making a lot of money and they're paying so much money to Uncle Sam. Meanwhile, it might not be the best entity for them. So this might be a good time for you to consider, what are my options, right? You could also be a business person who's been operating as a sole proprietor. You haven't registered it. You're trying your idea. When you start making money, it's crucial for you to consider incorporating, okay? So as a business owner, please consider incorporating if you haven't registered your entity. Also, if you have an entity open you've not been using, please close it, especially if you had that with a business partner. The reason is because when you leave a business entity open, someone can still use it to do stuff. We've seen it happen so many times. You can close it down and there's actually a form you can complete and send to the IRS to shut down the EIN. Yes, that's a thing, okay? But do it right. Don't leave it to say, oh, it's just going to expire at the state level. Then if you feel like you're making a lot of money and it could benefit you to elect to be treated as an S Corp or a C Corp, make the election. Now, hear me out, please. Not everybody needs to make the election to become a C Corp. And I'll talk a little bit more when I get to another post, just because as great as it might be, two of us might make the same money, but we have different situations going on in our personal lives where making an election might benefit one of us, but discredit another. Like if you have 3 kids and I have no kids, an S Corp election might be great for me, but for you, you might be missing out on a huge tax strategy. Or if you become an S Corp, you might complicate your life, okay? That's why I said it's important to have someone you can go back and have these conversations with. So what is my third tax strategy? Hear me out, you guys. Please understand your deductions and take them. So the Internal Revenue Code 162, you know what it says? It says if an expense is ordinary and necessary, you take it. Which means if I come to any business in your industry, I should see a similar expense being taken by other business people. That's ordinary, okay? I own a barber shop. In that barber shop, we're going to cut hair, we're going to buy seats, we're going to, that's an ordinary expense, okay? But you can have an expense that is not ordinary, but it is necessary. Please don't get scared and say, I can't write it off because other businesses are not taking it. Was it necessary for you to operate your business? If yes, please go ahead and take it. The IRS cannot even list all the business expenses you can take. That's why you need to understand, because you are the one who gets to decide how you use that stuff and how you should be able to write it off. Not that you get to decide, but they've given you the guidance. And the guidance is it's either ordinary or it is necessary. Same barber shop, okay? If I have a barber shop downtown and downtown is safe, maybe I just need to have a camera. What if I have a barber shop in a neighborhood that is not very safe and I'm paying for extra security, which is way higher than the standard? That may not be ordinary, but it's necessary for my business. So are you going to say I will not take that expense just because someone says it's too much? No. So it's important that you understand your expenses. I know most people will say, I just want a cheat sheet to, so can you give me a cheat sheet? And I always put a cheat sheet to show everybody. But my goal is no cheat sheet can exhaust your expenses. You see how long this is? And it doesn't even include all the expenses that your business can take. I put this to show that there's so much that your business can write off. But if you do not understand the IRS rules, you might be leaving money on the table. Okay? So let's go to my next favorite tip. Please file and pay taxes on time or do extensions. As a matter of fact, if you're a business owner, I always encourage business owners to do extensions, especially, I can send that. Yes, I can send that, Dr. Wilson, especially if you're not sure that you have all your things in order. Okay? Please do extensions. Now, if you suspect that you're going to pay, the extensions do not prevent you from paying the taxes. You're going to be penalized if you don't pay what you owe. But extensions are always great because it gives you time to make sure that you're not leaving anything on the table. Okay. If someone had paid you, and I was just talking to a client today and she's been waiting for her 1099 to be issued, it's not yet been issued. You don't want to file your taxes and then they file it and now you have this bill with the IRS saying you earned this income that you didn't report. So extensions are always great. Okay. If you're in a partnership and you are, or you're an S corp, your taxes are generally due by March 15th. If you're not ready, make sure that you do the extension and it'll give you 6 more months. For your personal taxes or C corporations, they are due April 15th. If you're not ready, extend, it gives you 6 more months. Now, for the LLCs, it depends on how you're set up. So if you're a single member LLC, I just saw the question, what happens is you usually file your taxes on the Schedule C with your personal taxes. So it would be due on April 15th. But if you have made an election to be an S corp, then your taxes will be due on March 15th. And if you're not ready, you can file the extension. If you're in a partnership, a multi-member LLC, you'll be due March 15th. If you're not ready, file the extension, okay? But always file your extension. That will save you a lot of headache and penalties, okay? Then please, for those that get worried about owing taxes, because as business owners, we're no longer employees. When you start to make past a certain threshold, we do your quarterly withholdings. Now, I have my views on that based on where a business owner is in their journey. But it's one of those one size cannot fit all. But if you believe that you start making a certain amount of income and you don't have and your expenses, you've exhausted your expenses and you still have a profit, it's a good time to at least do your quarterly filings, complete a form called 1040 ES. Okay. It's always due on the 15th of the month following the end of the quarter. All right. The next one, set an accountable plan, you guys. Now, this is only for businesses that have made an S corp election, C corporation, people that are C corporations or partnerships. What does the accountable plan mean? That's something business owners don't know. Do you know your business can reimburse you for expenses that you incur on behalf of your business? Think about it. You drive for your business, okay? Your business gets, the mileage has gone up to what? It's 68 cents, is going up to 70 cents. Imagine that's 70 cents for every mile. Your business gets to reimburse you that money, especially when you're making a lot of money, okay? Now, you have that money in your pocket. You don't report the income, but your business takes the deduction. Why are you getting reimbursed? Because those are expenses that if the business was supposed to pay, incur through someone else, they'll still have to pay. Okay. So it's very important that if you're set up as an S corp, a C corp, or a partnership, you can definitely set up an accountable plan for you and your partners. And all you're doing is you're explaining what expenses the business gets to reimburse. So let's say you have your phone bill, you pay part of it. It's your personal phone, but you use part of it for business. Business can reimburse you for that. Okay. Now, if you're not set up as these entities, you'll be able to write off these expenses on your Schedule C. But why I like it when you're set up in these entities, it's just because you have that added benefit where you can have that money going to your pocket and you save on taxes because your business takes the deduction, but it's not income to you because you incurred those expenses on behalf of the business. Okay. I didn't see the question that came in, but I'll definitely be looking at the questions later. All right. So my seventh one, this is my best strategy, you guys, for those that have kids, which I said I was going to come back to, is to hire your kids. If you have a business and you have kids under 18, there's no reason your kids should not be a part of your business. And it's for me, it's like one of the best. In fact, there are two tax strategies I love from Uncle Sam, but this is one of my best ones. Okay. And why I love this one so much is because when you hire your kids, first of all, you can pay them up to the standard deduction and you don't have to give them a W-2 or 1099. Do you know what the standard deduction for 2025 is, going up to $15,000? If you have 3 kids that are working in your business, that is $45,000 that your business just spent on hiring a whole workforce. That you don't have to issue them a 1099 or W-2. Your business takes the deduction and you can save that money for them towards college. They don't have to file any taxes because it's the standard deduction. It's at the standard deduction rate. So they don't have to file any taxes. All right. So definitely a good strategy to factor in. And I think the next thing I'm going to point out, because when I talk about this, a lot of people ask me, what happens if your kids are over 18? You can still get them involved in your business. Okay. You can create what we call a board of advisors. If you're an LLC, if you're an S Corp or C Corp, you can create a board of directors and have them serve as directors. Now, this takes now the strategy a step further. How does this work? When you guys have your family gatherings, from Thanksgiving, holiday travels, set up some board meetings and document it. Okay. What you guys talk about now, you get to pay for their travel because that's business travel. You hold meetings, those meals are covered, but you want to make sure you document what they talk about. That's why you want them to serve on your board of advisors or your board of directors. Okay. So huge strategy. And I just realized I missed one of my strategies. Now I'm thinking about it. I think I didn't add this slide, but I'll come back to that. Okay, so that's my seventh strategy. Please get your kids involved. That's why, if you guys remember, I was talking about the S Corp election, and I said it could be good for some people, but not for another. So you see, if myself and Dr. Burden, for example, we have an S Corp together, we have two separate businesses, and we're LLCs. We're both making $100,000 in profits. Now, we can both elect to make the S Corp, to do the S Corp, so that way we can pay ourselves a salary and it'll be a deduction to the business. However, if I have 3 kids that I can pay, I don't need to become an S Corp. I can keep filing on my Schedule C because there I'm claiming my kids on my personal taxes. That's a $45,000 write-off that I'm getting. Okay. That doesn't mean you cannot pay your kids as an S Corp. The only problem is when you go through your S Corp, is a separate entity from you. I don't have enough time to explain this, but I hope let me go as quick as I can. You either have to issue them a W-2 or 1099, or you have to create what we call a family management company to pay them through. All right, guys, don't worry. I have enough material on this, which I'm going to share at the end of this, how you can get those. So trust me, I've covered these in detail. Okay, my next tip, because I'm running out of time and I don't want Dr. Brown to give me any issues on bringing me back next time that I didn't respect the time. Okay, please understand how to pay yourself.
You can take your time. You can take your time because I'm sure based on the
Thank you.
our members are very much interested, and we love it. That's some good information.
That's good. Okay, I'm glad. Thank you, guys.
Bring you back, then I'm sure our members will be happy to have you back. So take it away.
Thank you. So the next thing we will talk about. Oh, go ahead. Oh, go ahead, Dr. Otten. Sorry.
I was just saying, absolutely.
Thank you so much. Awesome. So the next thing we want to talk about is understanding how to pay yourself. Okay. When it comes to paying yourself, because as a business owner, it gets really tricky. When you own a single member LLC, when you're a single member, when you own a single member LLC, the IRS doesn't have a tax code for single member LLCs. Let me explain. They call you a disregarded entity. What that means is, in the eyes of the IRS, you and your business are not separate from each other. That's why you file your business on a Schedule C. Where does your Schedule C go? It goes with your personal taxes. So if I call the IRS to talk about your business, I'm going to give them your social security number, not your EIN. Now, the best way to do that is for you to make an election to be treated as an S Corp or a C Corp, depending on the one that works for you. Okay, that way you now can become an employee of your business. When you become an employee of your business, your company pays you and your company writes off what it pays you as a business deduction. And then whatever is left now flows to your personal taxes as your owner's draw. Okay. Now, if you continued filing with as a schedule on your Schedule C, you cannot pay yourself. So as a single member LLC filing on a Schedule C, because the IRS doesn't see you and your business as separate, you cannot run payroll on yourself as an employee of your business and take the deduction. Now, not only is it wrong, but second of all, you're going to be paying Social Security and Medicare taxes twice. That makes no sense, because whether you like it or not, your profit will still have the profit you have to pay the 15.3% tax on it of Social Security and Medicare. So if you run payroll on yourself again, which is not a business deduction, you pay twice. Okay. So I know these are some of those things that need to go a little bit further, but it's always good to review with your CPA so that they know with a full understanding of how your business has performed to give you the right guidance. Okay. My next tip is please be prepared for audits. And honestly, I didn't even need to put this here because my tip here was supposed to be for you to make sure you're renting your home to your business. But because I'm going to talk about this later on when I talk about updates. But let's talk about this and I'll add that strategy later. All right. So please be prepared for audits all the time. I tell business owners, audits does not mean you did anything wrong. It's okay for the IRS to ask for more information. If you provide information that doesn't align with what they have seen in your prior years, they'll ask for it. It's your responsibility to make sure that you document every single thing, okay? If you write off mileage, make sure you're documenting it. If you write off travel, make sure you're documenting it. And let me drop a tip for travel, okay? Guys, when you're traveling, okay, like let's say we have, an ADSL conference somewhere and you want to go for that conference, all right? Now, conference can be deductible, but no, that's not even a good one. Let me think. You're going for your family trip, all right? Because ADSL conference will be deductible because you're going to advance yourself. Let's take a family trip, for example. You guys have a family trip weekend, okay? Maybe you're going to Orlando where Dr. Brown is. You guys want to go have some fun. That's where you are, right? Orlando. Now, as a business owner, let me tell you how the IRS does this. The days of travel are usually not factored in. So that's a business deduction, the day you travel. But then they expect that for you to spend the weekend and for it to be deductible, you need to have something business planned on Friday and on Monday. If you only have Friday, then why did you stay over the weekend? So if you're going for, let's say, family thing over the weekend, plan something, maybe a training, minimum 4 hours, plan something that will allow you to get something done on Friday and on Monday. Now that allows you to be able to travel on Thursday, have Friday through Monday and go back on Tuesday. Does that make sense, guys? Okay, so make sure you consider that in future trips, but document what you did on those days. All right. For those that take the home office expense, I saw the home office and that's why I remembered the strategy I wanted to talk about. You just always make sure that you have actually measured what your home office space is so that you have it written and kept somewhere. I'm not a fan of the home office expense, especially if you become an S Corp or you're in a partnership. Why? Because you can rent your home to your business. You can rent your home to your business for up to 14 days, right? And when your business pays you for using your home, you do not have to report the income and your business gets to take the deduction. If you go over 14 days, then you have to start reporting from 15 days as rental income. That's why we do up to 14 days. You can hold meetings, you can hold brainstorming sessions, you can hold masterminds. Now, think of it. If you do that once a month, right? And I'm going to add a little bit more here. Let's do it. Let's say we do it once a month, okay? And then in December, you do maybe 2 or 3 events, or you do 2 in November and then 2 in December to make your 14 days. That's great. How does the IRS factor the rate of the day you rented your home? It's the market value of that day. So if you live in an area or you're in a city and during those areas, you have busy seasons where people rent Airbnbs and the price is high, hold your meetings around there because we're going to use the fair market value of that day. So if I'm going to do something in my home and I know that I'm doing it in this weekend where there was maybe some game, like if I'm in Pennsylvania and there's a game and I know real estate or home rentals are high during this weekend and we hold our meeting, that's the rate we go on for that day. So you can be very strategic with this and it can give you a really good deduction. And that's why you have to make sure you document. Now, here's the catch. You cannot use the 14-day and the home office. The home office, in my opinion, doesn't give people as big a tax break as the 14-day does. That's why I usually encourage business owners leverage the 14 days. Because if you live in a certain neighborhood and you rent your home to your business, based on what you would have costed you to rent maybe a hall or a conference room and what the fair market value is, 14 days can add up to quite a bit of change. All right. So something to think about, guys. So that was the strategy I forgot to add. But you see, I did put it in there like that. Okay. My last one for you, please prioritize tax planning. Tax planning should not be when we're filing taxes. That's why I was laughing when I said I came on and I said, look, we do taxes based on historical information. There's very little we can do once the year is over. But you see, when you plan ahead, you see a lot of the strategies I'm talking about, like, you can start like getting your kids ready for their jobs and, assigning them different tasks, doing family contracts. And I'm going to tell you how you can get those. Okay. And all of those things. Tax planning is so crucial for you as a business owner. Please do not wait. And what do you need to have? Accurate records, right? So you want to invest in having accurate records so the tax person you're talking to can provide you guidance and strategies that will best serve you. You want to make sure you find a good CPA, all right? I'm a CPA and I work with small business owners and nonprofits. Not every CPA works with small business owners and nonprofits. So if you went to a CPA who is an auditor, first of all, they think you already committed a crime before you showed up to their doorsteps. And if that person doesn't serve you, that's on you because that's not their space. You understand? Which means when they take their CPEs, they're taking CPEs for business owners and nonprofits, for example, right? For me, once I'm studying, I'm learning about what's happening in the space so I can give you guidance. So you want to make sure that you hire a CPA that is very versed with small businesses, okay? If you have an industry that they're even good with, better. But generally, for most small businesses, we're always, around the same place. But you want to make sure that it's someone that is reputable when it comes to serving the small business marketplace. Check out reviews. That's very important because that's the person that will make a difference in how your business taxes go. And then, of course, make the financial commitment. There are people who always want to save money. They'll be like, oh, I don't want to pay someone, $300, $500 to consult for taxes. But then you end up owing so much because you wouldn't even know some of these strategies you will hear on social media, but nobody explains to you that you just cannot take the strategy because it's a strategy. It's very important how you're structured as a business. Some strategies cannot apply to you because you're not structured right to take it. And that's where having the right professional comes in. And then, of course, commit the time to do it as well. Okay. So let me go on to the next one now. What's happening in 2024? What are some changes? First thing, of course, has just been the change, the additions to standard deductions, which happens all the time because of inflation. So you guys know that retirement contributions has gone up. Same with IRA, which we always see happening. And of course, the big one for most business owners is the 1099K. Okay. They've been talking about changing this threshold. This is for people that process payments with like PayPal, Venmo, all these different services. Now, if you process more than $5,000, they have to issue a 1099K. Before it was over 20. The IRS is hoping to take it down to $600. They've been saying that forever, but it's been hard to implement. Now it's gone down to $5,000. So if you process that through a system, make sure that you report it, because if you don't, they're going to file that with the IRS, and the IRS is going to be aware that you made that money. For those that have been taking or were planning to take bonus depreciation, this is another one, is going down to 60% for 2024, and it's going to keep going down until it phases out. There are a couple of things that might change with the new administration has come up, but for now, we're just going to talk about what is there. So bonus depreciation has definitely gone down. So if you were planning to write off your car or something, your car that you bought for 2024, just keep in mind it's going to be 60% instead of the 80% for 23, and of course 100 in 22. There are several tax credits for business owners, guys. I'm going to go to the next page. I actually put them, just take a screenshot, research it, because we don't have enough time, but there are so many tax credits that I feel like business owners are not taking. Let me tell you the beauty of a tax credit. It goes dollar for dollar. It's not a deduction. It's a dollar for dollar. No, it is a deduction, but it goes dollar for dollar against any tax liabilities you might have. And we're going to talk a bit about it. And then my last one here is the increase in IRS enforcement. Of course, we heard that Trump is going to change that, but trust me, you see those agents that were hired, they are not playing. When I tell you the people that have been getting audited is not a joke. That's why you see me insisting on documenting your stuff, okay? Document. Some of the agents are really excited. Some of them send some letters and I'm like, did this person go to school? In terms of tax school, but they're doing their job. They're like, look, if you see anything, reach out. And that an audit is such an inconvenience to a business owner. That's why if you have everything documented, then you don't have to lose sleep. Okay, so I had a little screenshot here on some of the tax credits that I want you guys to consider. Please take a picture and look into this. Okay, you have the work opportunity tax credit, where if you hire people from a certain group, maybe former military and things like that, you can get that. The research and development tax credit is still there. You can get up to 20% of the credit for what you spend for research and development. Let me tell you how cool research and development tax credit is. Okay, it's not just for new products. Guess what? It's also for improvement on your products, which means if you improve your products and you can show that you did an improvement, you get to use the R&D credit. Guys, take advantage. Okay, you have the employee retention credit. It's phasing out. 2024 is the last year for people who have not amended their 2020 and 2021 taxes. If you're a business owner and you could benefit, please take it. Okay, you have the disabled access credit. Guys, if you have any disabled person and you had to make some restructuring at your workplace just to make them comfortable, take it. All right, feel free to go through all of these ones. I don't want to go through all, but these are incredible tax credits that are available for you. One that I really love, because a lot of people are going green. This one is if in a commercial building, if you bring in some green advancements and things like that, solar panels, you get the credit. So please take a screenshot of this as a business owner. Even if you don't need it now, it could come in handy later on. Okay, so a few reminders for you to stay compliant. We're running up, you guys. Thank you for hanging in there. First thing, please prioritize bookkeeping. It starts and ends there. Well, it doesn't end there, but it starts there, and that's very crucial. Bookkeeping and record keeping. Okay, you want to keep your records for a while. For your personal taxes, minimum 3 years. For business tax records, at least 4 years. If you feel like you had income that was not reported on your taxes because you were waiting from a partnership or an international organization, you want to keep your taxes for at least the documentation for at least 6 years. All right, in my opinion, scan it, keep it as long as you can. Okay, especially if you're a business owner. You want to issue 1099s and W2s before January 31st, and so we have till tomorrow, guys. Please do not miss this. Remember not to run payroll on yourself if you're a single member LLC. If you have any payroll taxes or payroll filings you have to do, please, guys, do it on time. Let me tell you, doesn't matter the kind of bankruptcy you file. You see these payroll taxes, it doesn't get taken off. Okay, file extensions if needed for your personal and business taxes. Like I said, avoid giving tax advice to clients. Now, it might not pertain to all of you, but if your business is in a space where sometimes people ask you for tax advice when they're getting a purchase, you want to be careful not to say stuff. Trust me, we've seen things happen, and that's why I put this here. Okay, do not ignore IRS notices, please. If the IRS sends you a letter, don't put it somewhere and say it's giving me anxiety and then you get a drink. No, take it, face it with your full chest, and then look for me and say, look, this is what I got from the IRS. What in the world is this? Okay. Amendments are always an option. We have up to 3 years to amend your taxes. Please don't sit and if you feel like someone did not do your taxes justice, and stay on it. Always get a second opinion. Okay. And then please implement all the strategies that we talked about. Get yourself a good CPA. Now, any questions? Before I go to questions, I just want to share one thing before I go off. I have a business owners planner that I do every single year. We had a slight delay this year. Please, it comes out tomorrow. Grab it. You see all the strategies I just talked about, they're there. Okay, we have a lot of stuff. We have a lot of what they call them again? Forms that you can use, like the family contract, the accountable plan contract. It's all there. Okay, I have a book coming up next week Friday. It's called Hire Your Kids, Save Taxes, Build a Legacy. You see the strategy I talked about, hiring your kids. If you or someone could benefit from it, next Friday, all of these will be on Amazon. And then my best one, which I'm excited for, is coming on Valentine's Day, is from Vows to Ventures. And this is partnerships for married couples, those that are building businesses and even nonprofits, because a lot of people never realize the intricacies when it comes to setting up partnerships for couples. And then Fabric of a Shiro. And then this is what we do. So I'm going to open it up for questions. I wanted to make sure that those that might want to grab the planner to me, even if you don't get anything, get the planner, and it comes live tomorrow on Amazon. Any questions?
I have a question.
Sure, please.
You mentioned bookkeeping quite a bit. I've been using QuickBooks. Yeah, QuickBooks. I've been using QuickBooks for about 30 years.
Okay.
Do you recommend any other software to use for bookkeeping? And also, when my kids were growing up, they worked for two of the organizations I had. One was the landscaping business, where my
Nice.
son, I had him out there on one of the crews cutting grass, and my daughter, she handled inputting all of the checks and all of that into QuickBooks. And then for my real estate ventures, of course, I had my son painting and doing all that kind of stuff. And my daughter, once again, it was her job to input all of the bookkeeping. Is there any other software you'd recommend?
I'll tell you, they all do the same thing. I only get angry with QuickBooks because they keep increasing their prices and I feel bad for business owners. But so far in the market, they're one of the best. And the reason why they keep standing out is because their system can interface with other systems compared to a lot of the bookkeeping systems out there. So there's Wave App Accounting. I recommend that for newer business owners because the free version is really good. So I always recommend Wave App Accounting. The free version is good. But for you who is a seasoned business owner, QuickBooks for now. Now you can check out Wave App. It's better price wise. They all do the same thing. You know that. If you want to check it out, but that would be QuickBooks for now will be one of those ones that have stood the test of time. They continue to improve themselves, advance themselves, and interface with other systems very well. So yeah, that's what I would say on that one.
Thank you.
No problem. Next question, and I'm just gonna leave this. Let me go here. I don't know. Yes. Okay, next question. Can I answer? Let's see. I think there was some in the chat.
We have one for Dr. Jack from Dr. Jackson. What if you don't have a tax designation, as in you're still filing under your name and you're behind? I have a family member who is behind for 2 years, but they haven't made much revenue for this business, only invested in getting it started. How would you advise that?
Well, they still can file. They will just file on the Schedule C. Okay. So the Schedule C is for people like that, people that have not registered their business but are in business. So the thing is, your name and your social security are legal for you to operate. You as an individual, you're a legal entity, by the way. That's why we call businesses legal entities. Why are you a legal entity? You can get into contracts, you can loan money, you can borrow money, so even with your name, you can start a business, okay? And with your social security, you're just as fine. The only reason we usually advocate for you to become an LLC initially, to get an LLC, is for protection, okay? But as far as tax-wise, the LLC doesn't necessarily give you a benefit in the eyes of the IRS. So whether you have a business entity registered or you're operating in your name, all of you are going to file your taxes, reporting everything on a Schedule C. So even if they are late 2 years, it's just for them to do their personal taxes and have their business income and expenses reported on a Schedule C. And keep in mind, even if they're not making a lot of revenue, so long as they are making revenues, they are in business. So with the IRS, the moment you make a sale, you're in business. Now, if you're only investing and you haven't made a sale, you're in startup phase. And with startup, you can write off up to $5,000 and then you in 1 year, and then you amortize the rest. But the moment you have made a sale, you're in business. So when it comes to year end, one of my best advice for business owners, if you're being in startup mode, make a sale. So for them, if they have been making some kind of revenue, they should be able to write off their expenses. Most new business owners spend a lot in setting up businesses. They shouldn't leave that on the table, as that could help them reduce their tax liability from any other income or even help with their refund. I hope that's helpful.
Thank you.
Awesome.
I think Dr. Wilson was that I definitely want to explore how to use the home for business deduction, leveraging the 14 days or purchasing a home through the business. Oh, that was one of Dr. Wilson.
Can you pull that up again? Or Dr. Wilson, can you just ask the question?
Yeah. So I like what you were saying about how we can use our home kind of like an Airbnb for business, and for I think 14 days out of a month, and get that rate and that be a deduction. So that's the first one. So how do you go about doing that? The second part of this is, I've heard often folks saying that you like buying homes through their business instead of buying it maybe just as an individual. And how do you do that? And like you said, legally, and being able to to use your business to do the purchase on the home.
That is so good. That is so good. Okay. Oh, this is so good. See why I get excited, guys? Forgive me. All right. First layer of this, okay? You have to make sure that you're set up right, which means your business should be either as has made an election to be treated as an S corp. It should be a C corporation or a partnership. That's the first thing. Because once your business is treated as an S corp, your business is separate from you as the owner. That allows your business to be able to rent from you, right? To use your home to hold meetings, to hold masterminds and things like that, and pay you for using your home, because your business could have gone to a hotel to rent a conference room to hold a similar meeting. Does that make sense? So the first thing you have to do is make sure that your entity structure is right. And then the second thing is, when you hold those meetings, please document, okay? Check what the rate was. I would take screenshot. I have people that would, I always encourage that you can document, put it down, show what the rate was on that day, and write down the expense. I always encourage that you actually invoice your business, okay? As the individual, invoice your business if you want. But even if you choose to do it at the end of the year, no problem. But so long as it's not over 14 days, your business can pay you for using your home for those days. Business writes the deduction off. You do not do anything, okay? So the first thing is just how you're set up. Is that okay? For that first part.
Yes, I was just writing.
Okay. All right, good. The second part is one of my favorite areas, all right? Because this is real estate. And I want to tell you guys, like I said earlier, the tax code is set up for two groups of people: business owners, real estate investors. Now, I've heard people say the thing of buying their homes through their business. It depends on what they want to do with the home. Let's start with that, okay? If you want to go into real estate, like you want to buy, you want to rent out, or you want to buy, because now how you want to go into real estate matters. But let's just assume you want to buy and rent to people, okay? Some people think buying through their business is smart. Now, if you're buying it because you want to rent to your business, so your business is like a tenant, and then you rent to other people where your business is operating an office from there, that might make sense, even though there might be a few issues there. I personally do not encourage that. If you have an operational business, I would highly encourage you to buy your house either in a new LLC or under your name, but separate from your business. And this is why. If you were to have a tenant and something went wrong and they sued you, they're coming for everything that's in your business. That's a big risk, right? Because you cannot control what tenants do. So now think of it, the risk that's involved, okay? And then not only that, now when you buy your home separate from you, real estate investing has a lot of strategies, so many strategies. In order to prevent things like audits, it's better when you can separate it, so you can leverage those different strategies. You can leverage it to help you even with tax liabilities that could come from your business. Now, when it comes to real estate, how the number of hours you put towards your real estate impacts how much you can write off as far as your deductions. So real estate has three types of investors. You have a passive investor, you have an active investor, and you have what you call a real estate professional, which is what Trump did. And that's why Trump was able to get away with $750 in taxes. Now, think about it. It doesn't matter if you bought the house under your business or whatever. What would determine how you're classified as an investor is the hours you put in. So I personally don't see the benefit of putting in your business unless it's part of your business to buy and rent, and it will generate revenue for your business. But for what I have seen for protection, I would think separate. Especially if you plan to buy multiple houses, you want to be able to separate. And if they are worth more, separate it from your business. Just that way you have that added protection in case something went wrong. They're not coming for everything that you have. But if you do insist now that you want to do it through your business, you can, okay? And I'm going to answer now your question because I wanted to give you some background information so you make informed decision. But if you wanted to still do it through your business, first thing is your business just has to show that it has enough revenue. For the most part, you won't go through the same process like an individual buying a home, okay? But they'll always go by what? Your prior years of taxes, your financial statements, and the big thing is the down payment. If you're buying it for rentals, you normally, to rent it out, the kind of property you buy will determine how much the bank charges you. So if you're buying a duplex, they know for a high chance you're going to find people to rent it out to, right? So they're likely going to give you a really good deal when it comes to to buying the property. They would ask for 20% down payment, but don't quote me on that because it changes with who your lender is. Okay, so for you as a business owner, just focus on making sure that you have enough cash to be able to back up that purchase. Please go ahead. Is that good, Dr. Wilson? Before I
it's a lot of food for thought. So thank you.
Okay, good.
Yeah,
Thank you.
I
All
think
right.
that's it. Dr. Cruz, you have your hand up. Go ahead, Dr. Cruz.
Yeah, hi, good evening.
I'm sorry, Dr. Cruz. I think we're not hearing. I think I did something that. Okay,
How about
you're
now?
live now. Yes, we're hearing you now.
Okay, Dr. Lilly, thank you so much. Very informative. I appreciate it. So I have a book, selling books, not a million books, but I'm selling books. And as a result of inventory and returns, you end up being in a negative state. That washes out your book sales. So how does that, is that something of a deduction that you can take? And I'm an LLC. So how does that work from the book sales perspective?
Dr. Lilly, your mic. I think you need unmute yourself. Unmute yourself.
You muted all of us, Dr.
I'm
Brown.
sorry.
You
I apologize. It was not intentional. I'm sorry.
I see the thing jumped on you, the dictator thing. I'm joking. I'm messing. Okay, so Dr. Cruz, you would treat it the same way someone who runs a regular store would treat it. Now, let me explain what I mean. If someone bought a book and they returned it, you made the sale. When they return the book back to you, there's something called on your taxes, you're going to see gross revenue. There's something called sales returns. Okay. You are able to deduct those returns that are made. It's actually allowed. And then you also get to deduct all your other expenses associated with the book, right? From mailing expenses, your internet, because you had to sit down to write the book, you needed your internet. If you have a home office, all of those expenses you have to write up. If you had to pay an editor, if you had to pay a designer to cover your book. So you still write up all your expenses. Now, I know sometimes people get concerned because they think if they're not profitable, they should not be filing taxes. No, if you made a loss, you should still report all of that because the loss will go against any other income you have, and that could help reduce any taxable liability. So, as when you're reporting your gross revenue from the books, you're going to see there's a line there and you're going to file on a Schedule C, okay? On that Schedule C, there's a line that says sales returns. It's for you to document all those ones that were returned back to you and you had to refund the money.
All right, so what if the returns, are going back to the distribution company, for instance, on Amazon?
Okay.
And then it goes the returns in the inventory you have to pay for, at the distributor, Ingram. But still, there are losses that you have to pay for. It's a loss to me, so I'm paying for it because I'm not making up the difference in book sales.
So
Does that make sense?
You have to think of this, right? Because I'm getting your question now. If this is an additional expense that you're incurring,
Yeah.
you're paying that to the distributor. It's just another business expense. Is that you are calling it a loss because in your own books, not your books, but it is a loss to you as a business owner because you have lost money. But
Right.
for us, when we're doing reporting, we're reporting that as distributor fees because they incur a fee when someone's restocked and then they bill it to you. Do you understand what I'm saying?
Sure.
So it would just be another expense that you would be reporting. It's like there's nothing you can really do because once they have to pay that cost of someone returning, then they charge you for it. So that's a distributor fee or restocking fee or however they call it that you unfortunately have to pay. So it's
I
an
see.
expense to you. Yes. Is that helpful?
Oh yeah, very. Thank you.
Awesome. Awesome.
That's
I
a
think,
very good one, Dr.
yeah,
Cruz and Dr. Lilly, because a lot of us as members of the ADSL Pro, we are as ADSL pros, I must say, we are writing our books, and that's a very
yes,
good point.
yes,
And for those who are authors and all of that, that is something to take into consideration because, as Dr. Lilly just talked about, the graphic,
yes,
the editors and all of that. I'm like,
yes,
I wish I knew all of this when I was writing my book.
yes, yes, yes. All of
Yeah,
them
yeah.
expenses you should take. Yeah.
So if you're a self-published author, I have 17 years of publishing background, books and magazines. Okay, so I know for a fact that if you're a self-published author, you're bearing the expense of publishing that book. On the front end, because you have to pay for just what Aiden said, Dr. Brown, you got to pay for the copy editor, the content editor,
Yes.
the interior and exterior design of the book and the layout and the proofreading. And then you got the front and back covers, the design of that. That's a huge expense,
Yes.
you
Yeah.
know,
Yeah.
and then, you have to break even.
Yes.
You gotta break even. I'm nowhere near breaking even,
Yeah.
but I have bore the expense over time. And
Yeah.
the time for me has been over the last 2 years.
Yeah.
So while I still it's something that is the reality of book publishing.
Yeah. 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 Unfortunately. Yeah.
Yeah.
I
So I know I'm in that boat. I'm just being transparent.
trust me, you're
You
not
know,
the only one. I'm sure many people here can relate to that because it's
yeah,
it's the price you pay in that space. Unfortunately. Yeah.
exactly. Yeah. So anyway, that's my 2 cents.
I always say the best way to look at it
Thank
sometimes
you.
is look at your gift to posterity and you just leave it that way. At least we didn't die empty. We didn't die full. We died empty. That's still the
Exactly.
exercise.
I like that. I like that.
Yes, yes.
Hey, I have
Thank you for that,
I,
Dr. Cruz. Thank you for that. Any other questions?
Dr. Orton.
I was,
Any
Yes.
other
I was gonna,
question? Dr. Otin? Sorry.
I was just gonna say I have a book by Rick Godwin, old book, probably 30 years old, and the title of that book is "Live Full and Die Empty."
See? Yes. We have to leave it behind. That's awesome. Thank you. And I think there were some questions in the email that you sent to me. Do you have
Yes,
that?
there are two questions in the in our email that let me pull it
Let's
up
just fill
so
in
that we can
any
answer
other
those.
questions, guys. Any other question? And before you leave, please, if this was good, I always appreciate reviews on Google. So it gives me more opportunities to talk to business owners. Okay. So if this was good, please, 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 or if Google or LinkedIn, I would really appreciate. I always appreciate feedback from you guys. Please.
I'm
And again,
driving, Dr.
yeah.
Brown. I'm driving, so please make sure I get Dr. Lilly's contact information.
Yes.
Did you hear me, Dr. Brown?
I think his stuff is going in and out. And also, if you don't yet have a CPA, please make sure you connect with us. We are always taking new clients, and we provide accounting and bookkeeping services, tax preparation, tax advising. We do business and nonprofit setups as well, and we provide tons of training. So if you don't have someone yet, a big part of what I do is really tax planning, tax strategizing with business owners, because I really believe that if you have the support, you will win. So definitely, if you don't have a tax person or CPA, I'm always happy to have conversations. And this is our contact information on the screen, and of course the review one. Did you find the questions?
Dr.
Yeah, Dr.
Lilly.
Brown.
Yes.
Dr. Brown, I was
Yes,
saying,
I
could
did.
you
I'm
give me
sorry. We
Dr.
have
Lilly's
a
contact information?
Constance.
Mhm.
Constance. Hi, Dr. Lilly.
Oh my goodness. Awesome. I saw your name and I thought I was dreaming. She made it.
Hi, Dr. Lily. Happy New Year.
Thank you so much. Thank you. This is
Uh,
my friend. Thank you so much. Constance. Oh my God, so good to have you here.
Thank you for
Thank
joining us.
you. So I have a question.
Sure.
I'm starting a 1099 job. So
Yes.
I'm like a contractor working for the as a nurse practitioner.
Yes.
So I have an LSA account, like a business. So how does that work? I don't know. I'm just really confused.
Okay. Oh, that's a good one. So the first thing you want to check with them if they're going to accept to pay you through your entity. Okay. Because some
Okay.
of them would rather pay you directly. If they accept, then you provide them when you complete the W-9,
Mm-hmm.
provide your business information and your EIN.
Mm-hmm.
Now, what is great about that is because since your payment is going through your LLC has options when it comes to tax planning. Because now your LLC, if you start making a lot of money and you want to save on taxes, well, for you,
Mm-hmm.
the kids can work in the business. But let's say you wanted to make a lot of money. You start making a lot of money and you don't have as many deductions. Your LLC we can make an election, for example, for you to be
Mm-hmm.
treated as an S corp. In that
Okay.
case, now your business will be paying you a salary, and your business can deduct what it pays you as a business deduction. Okay.
Okay.
And
Okay.
whatever taxes that your business pays for you, as well as your share, all of that is a deduction to the business. So you now get to save on taxes, and you have the benefit of your business building credibility. And down the road, if you decided to work for multiple entities, or even however you want to take it, or buy a car through your business, you have all of that income coming in, and you've built some credibility for yourself. So the LLC is great because it gives you flexibility. That's why I love it.
Okay.
Yes,
Okay. Do you cover New Jersey?
I do. We serve clients all
Okay.
over the US,
Oh,
all over.
okay.
Yes,
Okay.
all over the
Nice.
US, guys. Yes.
Okay. Thank you.
Yes, thank you so much, Constance.
Mhm.
Okay, so let's use the next couple minutes. We have 5 minutes. I'm gonna extend it 4 more minutes actually. One question: When would when would it be wise to move from an LLC to a I guess S corp or a C corp?
It was probably
How to best set up multiple LLC under one LLC?
okay. That's good. So the first thing is always it depends on your situation, and then when you start making a certain amount of profit, okay? Because the idea of electing to be treated as an S corp is to help you save on self-employment taxes, which is that 15.3% of taxes. So it's good to use numbers. If let's say you're making a profit of 100,000, that's 15.3% of self-employment taxes you pay on that money, and you still have to pay your personal income tax. By the way, that's the self-employment tax. You haven't paid your personal income tax yet. And if you have state taxes, you still have to pay your state taxes on that money. Now, when you make the S corp election, what happens now is if your business hires you as an employee, your business now would pay you, let's say, $60,000. Now, your business only has a profit of what? $40,000. That profit now will flow to your personal side. When you file taxes, you no longer pay the 15.3% of social self-employment taxes. You will only pay your personal income tax rate. So, and then the S corp now gives you a lot of other advantages. Most people will tell you when you become profitable, when you start making about 25 to $50,000, make the S corp election. I avoid putting a number to it because it depends on what you also have going on. So if you're making that profit but you have kids at home, maybe consider hiring your kids so you don't have to make the election. But if you feel like you don't have kids and you have a lot of profit you want to save, then that would be a good time. So it just depends on when you feel like, okay, I'm making enough money where I would love to save on self-employment taxes. So I wouldn't say best time per se. It just depends business to business and what's happening to you personally as an individual. That was the first one. The second one, how to set up multiple LLCs under an LLC. That you see, advice like this, I'm always careful to say it just because it depends on what you want to do with those multiple LLCs. So we have to start from there. What are you using them for? Because LLC is supposed to give you protection. Now, there are several states that have something called a series LLC where you can set up multiple under one. But I would first want to know what you want to do with those LLCs so that we know if it's a wise idea to have it set up under one or should be separate. And also, you may not even need multiple LLCs if you're not doing a lot of work. You could have DBAs. So if you have like Mary Kay, for example, you're doing Mary Kay, you're doing Uber, for example, you don't need to have multiple LLCs for each of those. You can just have DBAs. So you can have a main LLC and then you can have DBAs, right? Especially if you're just doing this part-time. Now, if it shows that you have material investment or a lot going on and you're bringing in a lot of revenue, and now you want to separate it, you don't even want them to be one, because if down the road you want to sell the business, what happens? So this is not a one size fit all. I always want to have the conversation first to know what you're doing with it, and then advise you if that's even a good idea, and of course it should be aligned with your long-term plans for those entities.
Awesome. Thank you, Dr. Lilly. Thank you. I think the last one is how to create a business.
Oh, that's a good one. Just go to the state or hire us. You can go to the state website. Now, if you're a hands-on person, go to the state website. Your Secretary of State website is where you start first, and you register the business based on how you want to set it up. Okay. That's why you want to talk to someone. I never encourage anybody to go register a business if they have not spoken to a professional, because you do want to talk to someone who can understand what type of business you're setting up, what you want to do in that business, how long you want to keep that business, and what your exit strategy is. And the reason for all this is because your entity structure is going to impact this significantly. I'll give an example. Someone might be setting up a business where they want to be able to raise money from the public or have investors. If you go set up as an LLC, you're shooting yourself in the leg, because investors might say, I don't want to be a partner in your business. I'd rather have you set up as a C corporation, and then your investors, especially if they are foreign investors, they can easily and safely invest in your business. So I would say at least consult with a professional, get these things cleared up, and then if the professional is not doing it, you go to the state website and apply what they have taught you. Once you've selected your entity, you've paid for it. Every state is different. Once that is done, you get your EIN number from the IRS, and you can go open yourself a bank account and start applying for the licenses. Okay. We provide those services, but there are other people who provide those services and lawyers as well. I just always encourage to at least talk with a consultant to know the best entity structure for you before you dive in. I hope that helps.
Thank you for that. Yes, thank you for that, Thank you for that, Dr. Lilly.
Yes.
And they said we have a saying that said all good things must come to an end, and it is so hard to say goodbye, but
Yes.
I know this has been a wonderful. I don't know what's going on with my camera, but I'm going to leave it right there. This has been a wonderful session. We thank you very much, and I'm sure we will be in touch to see if we can set up a round 2. But let's see how that works.
Yes.
We know you're a very busy person, and from all of us, from the association and all of us, I want to say thank you very much. I know Dr. Otain, I told Dr. Lilly off of air that she's an honorary member to the association. It's a board member. We're going to have an honorary member to the association. So thank you very much, Dr. Lilly. We appreciate you so much, and may God bless you in your endeavors. And I'm sure we will be seeing more and hearing from you more. Members, there's a clap. Okay, thank you very much for joining us. We will have the recording on YouTube, and we will share clips of snippets of the picture of the session on LinkedIn. So subscribe, follow, share, spread the news. Thank you, Dr. Oten. Thank you, Dr. Cruz, Dr. Wilson, Carol, Osifo, Dr. Lilly again. Thank you very much. And for the members who have left earlier, thank you for joining us. Have a blessed night. Take care, stay safe, and God bless you all.
Thank you, everyone. Have a good one.
Good night, brothers and sisters.
Good night, Dr. Oten. Take care. God bless.
Hey, Dr. Brown, please give me Dr. Lilly's contact information if you don't mind.
All right, I'll send it to you in an email. Hopefully, I can.
Okay. Yeah, because I've been driving the whole time.